This is Commodity Wrap. I'm Tony St. James, and we're joined today by Brian Hoops. Brian is president of Midwest Market Solutions. We'll have a way to contact Brian coming up in our second segment. At the end of the session, really, again, a little more pressure out of the equities on Wednesday, and maybe that's where we start, Brian. Again, just looking at how the Dow, NASDAQ, and S&P have really been under pressure the entire week. What's that say when we see pressure in the equities?
Yeah, usually it's not anything real positive for our markets. And we saw, the sell-off come about 11 o'clock. President Trump was having a news conference and talking about the tariffs that he is planning on enacting and talked about tariffing against the EU, probably 25% tariffs on the EU. And that, I think, is what started to really put some pressure against the equity markets about that time. I don't know if it really translates that much into the grain markets today because we've been talking about tariffs against Canada and Mexico for some time, and it looks like they're going to be enacted. Of course, President Trump says that they will be at this point in time. And, we're just kind of waiting for that to happen. I think we'll also see at some point, not these tariffs against China, at least 10% and maybe more. And I think undoubtedly that will affect us probably adversely, at least at first, until there's a trade agreement that is worked out in the end.
All right, let's go to the row crops where we saw corn, soybeans, wheat, cotton. Pretty much everything on the row crop side was in the red. I'm just making sure that rice settled in the red as well. It did, and I think, not that we talk a whole lot about it, but oats lower as well. What's the story on the row crop side?
Yeah, I think, this week it's a couple things. We talked about the tariffs. So that is certainly something that is going to be impacting the grains for some time. But we also have first notice today. Delivery begins tomorrow after the close against March grain contracts. We went into the week, and we talked about this Monday on TV, huge open interest figures for commodities such as corn and to a lesser extent soybeans and wheat. That meant the funds were probably going to liquidate some of those long positions and then turn around and buy into May or by July and support those markets. And so we've seen nothing but liquidation against the March contract for the 3 trading days this week. By tomorrow, we should be pretty much done with all the fund liquidation and the moving out of the March contracts. Typically, when that happens, you wrap post the delivery period. And, of course, there's other factors at play, but if we can get past these deliveries, we should be able to have another rally. So you have that working for us. You have the Outlook conference going on this week. It's the first look, and it's expected to be very early in the morning, 6 a.m. Central Time, when the USDA offers their projections for this year's planting numbers. Of course, this is the intentions report at the end of March. It's not the June report. It's something that is not nearly as widely followed or important, but it's at least it's a first glimpse of what the USDA thinks farmers will plant this spring. We're looking at probably more acres than what the average trade guess is. Our company's looking at 95 million acres. The average trade guess is about 93 and a half. So somewhere we'll find out, which is more accurate. But I think as we get closer to the spring, corn is going to try and be stronger to make sure that we plant at least 93.5 million acres, maybe closer to 95 million, to try and get enough acres to meet the demand that we have for corn, because our demand has been very good for the corn market through these winter months.
And I think you and I have talked about this as well. We got the planting intention survey earlier in the month from the National Cotton Council, 1.5 to 2 million acres expected to shift out of cotton to something. Now, we know some of those acres really don't have a choice. Those are going to be dry land acres. But somebody with irrigation, the choices would be, I think, corn at this point. So yeah, I think you're probably spot on with more acres going to corn. Now, before we roll out of this, though, spring wheat down 6 consecutive sessions here. I know we talk about wheat in general being lower, but is there something else happening with spring wheat?
I think the concerns with the spring wheat, it would be friendly if we kept that border shut for a while. Because we have to import some wheat, we have to import oats. Canola is another market that would benefit to the Canadian border being shut down. These tariffs should act as a little bit of a positive for those markets. But yet you did see oats back off today, spring wheat down fairly hard today, and it's, I think because we're pushing that tariff date back yet another month. Back instead of March 1, they're going to start April 1. So it gives us more time to work out an agreement, which in the end, I believe is what the president wants. He doesn't want to tariff these countries. He wants a better trade agreement because China is by far and away the biggest trading partner we have. But our budget deficit, our trading deficit is $295 billion. And Mexico's number 2 at about $152 billion. And Canada is number 3. And our trade deficit with them is around $60 billion. So there's something from all these countries that we can gain, and trying to improve those trade relations is a big step in that direction. Of course, spring wheat hasn't been seeded yet. It'll be seeded into the spring time frame. That is another market that, if the border does remain shut or if there's tariffs in place by April the 1st, that is a market that could try and rally to encourage U.S. farmers to plant more spring wheat this year.
You mentioned oats in there before we go to the break here. Coming up the session on Wednesday, 10.1% gain week over week for oats, up 13.7 year to date. We'll take a break, be back in a moment. Commodity Wrap continues after this. This is Commodity Wrap. Brian Hoops is our guest today. Brian is president, Midwest Market Solutions. All right, looking at what happened over in the livestock markets and stepping back. Again, for the most part, we saw a lower close generally from live and feeder cattle. Both of those had 3 sessions higher, and a reversal for hogs as they move higher after being lower for 5 consecutive sessions. Thoughts? What do you think?
Yeah, you look at the hog market, first of all. We've been lower 5 days in a row, like you mentioned, extremely oversold. Now, the cutouts yesterday afternoon were a little bit higher, so that I thought was somewhat positive. And the big thing was going to be today, can we hold the previous day's lows? And if so, we should be able to try and rally from here and see some short covering rally. We talked about that on the TV segment this morning, and we were able to hold those lows, and we rallied with that, I think, fundamental support coming because of the higher cutout values. Now, the feeder cattle market, the really only one that closed higher was March, and it's trying to narrow the spread between the cash and the futures where we're at. The futures are heavily discounted to the cash markets, and that, I think, is really the lone bright spot for the feeder cattle market. You can look at the market structure, and this market is being led lower by the front months, live cattle and to an extent feeder cattle. It's because the funds are liquidating those long positions that they have. You can see with April live cattle down $1, October down 75, August down 75. That's unwinding of bull spreads. And that's not a bearish market environment. So it tells us the funds are liquidating. It's not bullish right now. Futures positions to be in. At some point, I think things will turn around, and then we'll have more positive news. But at this point in time, a couple-day rally in the cutout values is just not enough to tell us the signals are green, get back into the market and buy this thing again. And until that happens, we're probably going to see fund liquidation continue.
So I'm also looking at the February contract for live cattle. Obviously, that one's set to expire this week. 198.82. So maybe the suggestion $1 less on cash trade this week?
Yeah, probably somewhere in that range. We had 199 in the Southern Plains, so I think the February contract is telling us it's going to try and expire steady, maybe at that 199 range. That's what it's kind of anticipating. I think our calls at best are steady this week. I don't see higher cash trade developing, maybe even lower. But once February's off the board in 2 days, now you're looking at a $4+ discount April holds to the cash market. So that's your lone positive. That's the biggest positive you can come up with right now, is that April is discount already to the cash. If we can see cutout values stabilize, that'll stabilize the cash. Then we can just come back in to the futures market. But until then, I don't know that there's too many people willing to step in and aggressively buy this market.
All right. We mentioned it early on. If you want to visit with Brian, there's a couple of ways we can do it. Where do we find you?
Yeah, you can reach me directly, number 417-501-5132. You can also go online to MidwestMarketSolutions.com, find a list of our offices. I'd be glad to talk with you. And I did want to mention to you, Tony, I got an email from a TV watcher this morning from Alberta, Canada, asking some questions about markets and what we're talking about when we talk on the TV segment.
Well, that's great to hear from Alberta, Canada. By the way, give us the phone number one more time.
417-501-5132.
It's Brian Hoops. He's president, Midwest Market Solutions on Commodity Wrap.